XRP holders, listen closely, because something massive is unfolding beneath the surface, and it is happening quietly, relentlessly, almost like a tide that refuses to pull back, because since mid-November, XRP ETFs have reportedly attracted more than $666 million in inflows, a number so large, so deliberate, so undeniably institutional, that even the analysts who doubted XRP are now scrambling to understand what kind of storm is forming behind these doors, and while retail traders argue on Twitter, and fear spreads across the charts, and the price pulls back, surging, dipping, moving in waves of uncertainty, the big players, the funds, the long-term money, they are not hesitating, they are not panicking, they are accumulating, methodically, strategically, quietly, because inflows of this size do not happen by accident, they do not appear from speculation, they do not come from memes or hype, they come from conviction, from preparation, from portfolios that are being positioned for something that retail does not yet fully see. And when you track the timing, when you study the order flow, when you connect the dots between mid-November and now, the pattern becomes impossible to ignore, because the money begins flowing in right before the wave of new ETF launches, right before the filings accelerate, right before major firms begin pushing XRP products to the front of their investor lineups, and it tells a story, a very clear story, a story that institutions, whether they admit it publicly or not, believe that the XRP market is on the edge of a new phase. A phase of legitimization, a phase of regulatory clarity, a phase of utility growth, a phase where XRP is no longer a speculative asset, but an infrastructure asset, a settlement asset, a liquidity asset, and that is why this 666 million figure matters, not because of the number, not because of the shock value, but because of the behavior it reveals, the sentiment shift it proves, the long-term positioning that cannot be hidden behind price-based fear, because even as volatility spikes, even as the market shakes weak hands out, even as headlines push negativity, the inflows continue, the accumulation continues, the confidence continues, and if you understand how institutions operate, you already know what this means. You know that inflows this large usually come before catalysts, not after. You know that the heavy money moves early, quietly, ahead of the crowd, and then waits for the rest of the world to catch up, and right now, XRP is in that exact moment, the moment right before recognition, right before the news cycle flips, right before the narrative changes, right before the true value begins to be priced in. But the question hanging over the market is simple, almost haunting, almost uncomfortable. If institutions are buying this aggressively, if they are pouring hundreds of millions into XRP ETFs during a period of uncertainty, what do they know, what are they preparing for, what is coming next, and more importantly, are you positioned for the moment when all of this becomes impossible for the rest of the world to ignore, because the inflows are not slowing down, the fundamentals are not weakening, and the utility narrative is not fading, XRP is being accumulated, heavily, quietly, and relentlessly, and when you trace the flow of this $666 million, you notice something even more shocking, because this is not random retail noise, this is not hype-driven FOMO, this is structured capital, moving in waves, entering through institutional rails, and every single inflow spike aligns with specific calendar windows, treasury liquidity days, and post-settlement ETF rebalancing periods, meaning this is coordinated, calculated, and absolutely intentional. Because no fund allocates this size unless they see a future payoff, a narrative setup, or an asymmetric advantage forming before the public sees it. And this is where the XRP story gets interesting, because despite the inflows, despite the institutional interest, despite the ETF expansion, the price keeps getting suppressed, pushed down, shaken violently, almost as if the market wants the average investor to feel fear, exhaustion, surrender, and sell off their position at the exact moment that institutional wallets are silently accumulating. And you can see that accumulation pattern clear as day in the chain flows, in the bid walls, in the spread tightening, all pointing toward a silent preparation phase, a loading zone, a coiling spring waiting for ignition, and while the headlines distract, while the media talks about Bitcoin dominance or Ethereum updates or political gridlock, the smart money keeps building exposure, one block at a time, one inflow at a time, adding to a position they clearly intend to hold long-term, because you do not deploy $666 million into an asset you expect to fade. You deploy that size because you have a conviction rooted in regulatory clarity, global settlement rails, cross-border volume projections, And the utility thesis that is finally becoming mainstream, and this is where the retail investor faces the hardest moment, the psychological breaking point, because the charts look weak, the candles look bearish, the volatility looks scary, yet behind the scenes the data says otherwise, the money says otherwise, the ETF flows say otherwise, and if history repeats, this kind of inflow, this kind of silent institutional positioning, usually appears at the start of a major narrative shift, not the end of one. And now the question becomes simple: will the average holder panic sell into institutional buy orders, or will they recognize that $666 million is not a coincidence, it is a signal, a message, a clue about where the next phase of this market is heading, and whether or not they will be part of that moment when the narrative flips, the liquidity returns, and XRP moves the way an asset with real use case and real institutional demand is meant to move, and everything happening right now, every inflow, every volume spike, every ETF addition, every on-chain signal, is pointing in the same direction, the direction that institutions already see, the direction they have already positioned for, quietly, strategically, while the rest of the market sleeps. So now we reach the part where the numbers no longer feel like numbers, where $666 million in inflows turns into a signal, a pressure point, a quiet message from the deepest corners of institutional money, and as these inflows rise, almost silently, they begin reshaping the entire landscape of how traders, funds, and market makers interpret XRP's long-term trajectory. Because money never moves without meaning, and meaning never forms without momentum, and momentum is exactly what XRP is generating right now, quietly, steadily, relentlessly, and when analysts whisper that these inflows might accelerate, they're not talking about hype, they're talking about allocation models, about portfolio balancing, about risk managers who finally see clarity instead of chaos. And as this money flows in, week after week, it becomes harder for skeptics to claim that institutional interest isn't real, because inflows don't lie, charts don't lie, liquidity doesn't lie. And the pattern forming right now is not the pattern of a fading asset, but the pattern of a rising one, and traders watching this know exactly what's coming. They know that rising inflows typically precede structural price shifts, they know that liquidity expansion often leads to volatility compression, and they know that once volatility compresses long enough, it usually snaps upward, violently, unexpectedly, dramatically. And this is the moment XRP holders have been waiting for, the moment when inflows stop being a headline and start becoming a catalyst. Because $666 million is not simply capital, it is conviction, it is commitment, it is confirmation that the narrative surrounding XRP is shifting, and as this capital deepens, spreads, compounds, it begins altering the psychological landscape of the market, creating fear in those who sold early, confidence in those who held, and urgency in those who waited too long to act.